When we talk about a net worth of $500 million, it's crucial to understand this figure represents the total value of assets minus liabilities. It is not simply $500 million sitting in a checking account. This level of wealth is typically highly diversified and professionally managed. It involves a complex structure designed for growth, preservation, and intergenerational transfer. A significant portion of a $500 million net worth is often held in illiquid assets. These are investments that cannot be quickly converted to cash without significant loss in value. Common examples include large stakes in private companies, extensive real estate holdings, and complex financial instruments. Publicly traded stocks and bonds are usually a smaller, though still substantial component. Substantial capital is frequently allocated to private equity funds or direct investments in private companies. This provides potential for high returns, but comes with long lock-up periods and significant risk. Venture capital investments in startups or early-stage companies are also common. These are high-risk, high-reward plays that form part of a diversified portfolio at this scale. Large-scale real estate is another cornerstone. This isn't just a personal residence, but often includes commercial properties, development projects, or significant land holdings. These assets generate income through rent or potential appreciation. Managing them requires expertise in property management, development, and market analysis. While less dominant than illiquid assets, a significant portion is still invested in public markets. This includes stocks, bonds, and other securities traded on exchanges. These portfolios are typically managed by sophisticated wealth management firms. Strategies focus on long-term growth, income generation, and risk management through diversification. Diversification often extends to alternative investments. This can include hedge funds, commodities, fine art, collectibles, or even intellectual property. These assets offer potential returns uncorrelated with traditional markets. However, they often require specialized knowledge and can be highly illiquid. For many with this level of wealth, a large part of their net worth is tied up in businesses they founded or own significant stakes in. This could be a privately held company or a substantial share of a publicly traded one. The value of these businesses fluctuates with performance and market conditions. Managing this core asset is often the primary focus. Managing a $500 million net worth is a full-time job requiring a team of experts. This is where family offices or multi-family offices come into play. These teams handle investment strategy, legal affairs, tax planning, philanthropic activities, and day-to-day financial administration. Their goal is to manage complexity and optimize outcomes. The primary objective shifts from wealth accumulation to wealth preservation and strategic growth. The focus is on protecting capital while generating returns sufficient to maintain lifestyle and grow the principal over time. Tax efficiency and estate planning become paramount considerations. Strategies are implemented to minimize tax burdens and ensure smooth wealth transfer to future generations. Despite the large net worth, liquid cash is carefully managed. Enough is kept accessible for immediate needs, but the majority is invested for long-term returns. Accessing large sums often requires selling illiquid assets, which can take time and impact value. The structure is designed for long-term holding, not immediate spending of the total sum. The sheer complexity of the asset structure is a defining characteristic. Valuing the net worth itself requires regular, sophisticated appraisals of diverse holdings. The illiquid nature of many assets means that while the net worth is $500 million on paper, the amount readily available for discretionary spending is a fraction of that total. It represents potential value, not spendable cash.